Are you trying to make sense of the housing market, but everything that you see either on TikTok, YouTube, Facebook, Google are completely conflicting ideas of if the housing market is going to crash or if the prices are going to continue to rise? There is so much noise out there that sometimes I even have trouble deciphering through it. But to get real, nobody has a crystal ball. Nobody can predict the future. But what we can do is we can look at data, and I do comparisons year by year, month by month. So let's just go ahead and take a look at the data, since that is the solid evidence. It's not an opinion, it is fact of what is happening in the Kansas City market today. Also, if you find any of this information helpful or you like what I present here, would you please like and subscribe, as that helps get my channel out to more viewers like you. Let's go ahead and start with the most recent month of November. So looking at November 2023 and November 2022 and comparing them with this chart that I made, I took the bigger cities or towns around Kansas City just to give you an idea of how the markets may vary depending on location. I've put them in categories of area, solds, average sell price for those solds, how many of those homes sold in less than 30 days, and then in the 2023 chart, I have the current amount of active listings and their average sell price, and the current amount of pending listings and their average sell price. So here on the 2023 chart, we have red and green arrows indicating if the number went down from last year or up from last year. As we can see in 2022 for the month of November, in Blue Springs, there were 56 homes sold with an average sell price of $334,000. 35 of those homes sold in less than 30 days. If we hop over here to 2023, we see that only 55 homes sold in Blue Springs, which is only one less. I wouldn't say that's very noteworthy, but if you look, there was a price drop of $14,000 for the average sell price, which that can vary month by month. Doesn't necessarily represent a trend. There may have just been fewer higher priced homes that sold this November compared to last November. Oddly enough, 35 homes sold in under 30 days in the month of November in Blue Springs for both years. Dropping down to Lee Summit, we had 118 sold in the month of November for 2022. In November 2023, there was only 112, which is just 6 units difference. But if you go over here and you look at the price, that jumped by $43,000, which, just like going back to the Blue Springs one, there may have just been a couple more homes that brought up that average sell price. But you can also kind of see the trend setting by hopping over to the pending section on November 2023 in Lee Summit, how there are 60 homes pending with an average list price of $482,000. If you look back up at the Blue Springs one, there are 35 pending at $318,000. So it looks like Blue Springs is likely staying in that 320 range that we saw this year, and I would be willing to bet that Lee Summit is not dropping back down to that 415 that we saw in 2022. Without going through all of these, if we just look down, we can see that in most areas there were less sales, but more often than not, the average sell price increased. Looking at Green Valley, we have a difference in price of $34,000. In Independence, we just have a jump of $13,000. Overland Park actually took a hit of $31,000. In Leawood, there had to have been some amazing houses that just happened to sell in November. So if you look back at 2022, obviously, I wouldn't say that home values almost doubled in just 1 year. I would say that that pool of homes that sold, there was a huge one, which I should probably go and look to see what it was, but a big one that sold and brought that average sell price way up. In all of Clay County, there was about a $20,000 increase. Cass was an $87,000 increase, if my math is correct, and Platte was a $64,000 increase. So that was just November. Let's go back and look at October of 2023 compared to October of 2022. These reports are generated by the Kansas City MLS. So this year in October, the average days on market was 36 days on market, which they're not giving you the amount of homes that sold in under 30 days. They're just giving you the average days on market. If we look at the month supply, that generally changes not only on how much inventory we have, but how quickly the inventory has been moving. And if we look over here at the percentage of the original price received, so that's like saying if they priced a home at $100,000 and it sold for $98,000, they got 98% of what the original price was. And here in 2023, that is 0.1% different from 2022. Years prior to that, we were breaking 100% on most homes, but we'll get to that in a minute. Now here's where it gets interesting. The average sale price in October of 2022 was $339,000. Fast forward to 2023, it was $350,000. The closed sales has definitely dropped about 200, almost 300. The pending sales has slightly dropped, and the total inventory has slightly dropped. You could say that the housing market is winding down or trending down, but using the words winding down or trending down definitely, in my opinion, again, doesn't tell me that there is a housing crash coming so much as it's leveling out and maybe getting back to some sort of normalcy. If we look right here at October of 2021, where the market was a little stronger, you know, we were getting 99% of the original asking price of homes on average. The average home was on the market for 22 days. But look again, the average sell price was at $310,000 for that month of October in 2021. More closed sales, more pending sales, our inventory was lower. Now I couldn't find my October of 2020 market report, so we will just go ahead and jump over to June. June is always our highest performing month. Middle of the year, kids are out of school, everybody's ready to make a change, make a move. If we look at June of 2022, the average days on market was 16. The average percentage of original list price received was 103.3%. Average sell price, $357,000, 4,000 closings, 4,000 pendings, over 4,500 in inventory. Fast forward to this June of 2023, 30 days on market on average, only 101% of original value received. The average sell price has jumped to $374,000. Our closed sales dropped to 3,700, pending 3,500, and our total inventory went up to 4,900. So like we've seen, a lot of those numbers in those data sheets definitely show a trend of leveling out, but I mean, the prices are still going up, so I can't confidently say that there is going to be a housing market crash, for one. For two, anybody who says that there is going to be one is either being hopeful or not paying a lot of attention. There are a lot of realtors out there, a lot of normal people, YouTubers, all kinds of people predicting a crash, but you have to ask yourself, like, why? How would that benefit you? Why would you be hopeful for it? We all saw back in 2008, which I was not long out of high school, so I wasn't thinking about buying a house anytime soon, but a lot of people who feel like that they would benefit from a housing crash now did not benefit from a housing crash then. The unemployment rate jumped. So yeah, home prices were dropping, but people didn't have jobs to purchase those homes, or, you know, financing. They couldn't obtain financing. Another thing I would like to ask is, of the realtors or anybody who does help people purchase a home, any of those people predicting a market crash, should they be ethically helping people purchase a home? I mean, I'm not going to sit here and tell people that they should wait until the market crashes, because I don't know what their situation is going to be after the market crashes, if the market crashes. But if I truly believed that a buyer that I was helping is going to be hurt by a market crash, if I got them into a house now and the market crashed tomorrow, if they were hurt by that, I would be advising against people purchasing a home. So I do wonder if the realtors who are on YouTube or on their blogs or anything like that talking about a market crash happening, if they have completely stopped helping buyers. Another thing to think about would be, why aren't more people selling their home so that they can cash out their equity and then just go rent someplace, go live with family somewhere until the market crashes, and then take all that equity and repurchase their house, their old house, and they walked away. They pay off their house with the equity that they pull out now and just shove back in it whenever they purchase it after the crash. There's just a lot of stuff happening that requires a lot of critical thinking, like, who is benefiting from this? Why aren't people doing this if a market crash is so sure on the horizon? In my opinion, right now is almost one of the, I wouldn't say perfect time because prices are high, but it is a really good time to purchase if you are deciding to purchase right now, for a couple reasons. One of them being the higher interest rates. That may sound bad to you, but what it does is it makes a lot of people have that same line of thinking, that they don't want to purchase a home right now because interest rates are too high. Well, if that buyer pool has dropped and our inventory is going up, you will be able to purchase a house without as much competition, without giving up as much. During the peak of it, there were people writing as-is offers. There were people writing or waiving inspections, waiving appraisals. It was so competitive that people were waiving all those rights and offering way more than the house was priced at in the beginning. So currently we don't have that issue as bad. I mean, there are still some homes that are priced great neighborhoods, great condition. I don't know what the seller's position is, if they're even planning on purchasing or if they're just going to cash out their equity hoping that the market crashes. But you're not competing with as many people, so you can get into that home less stress. It may be more money, maybe a higher interest rate. Interest rates are predicted to go down. Your interest rate doesn't rise unless you have a adjustable rate mortgage or anything like that. So you'll be set in stone unless you go to refinance down the road if rates drop, which they are being predicted as dropping next year. They've already gone from about 7.5 to 6.5, but I'd have to go and look at what the interest rates are today. They change constantly. Another thing to think about is most people end up staying in a home a minimum of 5 years. I think the average person lives in their house for 5 to 10 years before selling. The last housing market crash that we had, it started to bounce back after that 5 years. So I mean, if there are people that purchased a home right before it and lost all their equity, by the time that they went to go and sell, they had already accumulated all that equity back. Going back to the '08 crash, a lot of that was caused by financing. So people took adjustable rate mortgages, so their interest rate could fluctuate because they had a low mortgage payment, and it was probably for a shorter note, so 5-10 years. All that would be due, so whatever you hadn't paid off in that 5 or 10 years would be due at the end of that note, and people didn't realize how that financing worked, and that's why they would lose their house. They either couldn't refinance it whenever they needed to get out of that adjustable rate, or it came due and they had to short sell or foreclose on. The other thing was in 2008, the unemployment jumped. I think it was 9% in 2010, 2008, somewhere right in there. Here in 2015, I think it was just over 5. And then by 2020, 2019, it had dropped to 3.5. There was a slight jump when our COVID hit. I think it got back up to 8, and then it is currently at about 3.5, 3.7, I think is what I just saw. So you can read all the articles you want that say the market is doing great, it's going to keep rising. You can read all the doom and gloom articles if that's what you want to read, if that's what you like, if that's the vibe that you like to have all day is dooming and glooming. But at the end of the day, the data here in the Kansas City area shows the housing market's still strong, it's still rising. I do know that, places like California, the coastal areas are starting to fall. I know I've got some clients that were in Florida, they're seeing the same thing. I don't monitor those trends as much. I have looked at some data that kind of outlines the whole United States, and a lot of the Midwest is definitely doing better than the coastal areas, which is probably why we have a lot of people coming from California to the Kansas City area. I have a few from Texas, I have a few from New York, and I've had people come from Florida as well. But that's all I have for you today for the November of 2023 market report, and if the housing market's crashing. Like I said, if you enjoyed this content and found it informative, please like and subscribe. Share it with as many people as you think might find it interesting. Always happy to help share my knowledge. Thanks, and I will see you later.